Hey everybody, big one today. 64 nuggets, no less. Thank you all for coming. Happy Sunday. And we'll get to the special day it is as well. I'll be talking about investing tips, 5-year runway, the importance of that, how timing is key, how investing is a blood sport, how 30K is not enough, how there could be options to make passive income in a very special way. We'll talk about CyberCab's disruption or be disrupted, owning Bitcoin versus owning a house, Bitcoin is universal currency, cost of liberty, diversification, real world assets, so much more. It's, again, this show is a function of what people ask, not the weird ideas in my head. So thank you all for coming, and thank you to the mods in the chat too. Bitcoin is up $600 today, so we'll take that. And disclaimer, this is not financial advice. All the questions come from Patreon. Patreon make this possible every single day. And the people here in the audience, thank you so much as well. Jeff Hammer, Pancake Panda, Crypto Katana, Andy in Australia is up. And who else? Glenn Joe. Let's go. Shout out as well to the investing mums out there in the audience. You are powerful women. And happy Mother's Day to each and every one of you. The most important people on this planet, no less, in my humble opinion. And anyway, take care of your mothers if you are not one of them. And if you are one, put your feet up and be spoiled. Let's go. Very first question. In this one, this question is tough, and I'm going to spend a lot of time on it because there's a lot of stuff happening in the world and people aren't ready. And that lack of preparedness disturbs me. But we're going to go into this one from Hang Loose. Just joined Patreon. I'm grateful to have the opportunity to learn. I realize my pension will not sustain my wife and I. So, with your inspiration, I pulled my RRSP and TFSA accounts from the bank. I split them 1/3 into Tesla at $167 and 2/3 into IBIT at $36. My plan was to see IBIT grow this year and roll into Tesla for the longer time frame. Total cost about 30,000 Canadian. This is my only shot at changing my financial freedom. And I feel that rolling everything at Tesla is too risky. Any suggestions to improve? Well, there's a whole bunch here. And I thought, well, let's start with get this out of the way first before we jump in. And I'm going to just share what I do, what I've done, and that's it. But I do not, very, very important, I do not give financial advice. I do not know your burn rate. I do not know your time to retirement. I do not know your medical situation. I do not know your age or your wife's age. And I do not know your pension income. Thank you, Joseph, for coming. So, assuming all of these unknowns, I can answer the question without giving any advice. Well, I will show you, though, what I would do in this situation. And this will come with some hard truths as well, because sometimes we have to share the ugly news with the good news. If you came here for everything's going to be fine, that's not the right place. But it's better to be forewarned so you can prepare. Now, this is a stat, shocking stat. Shout out to Sanjay as well for sharing with me as well over the weekend. The traditional three-legged stool of retirement income, personal savings, pensions, and Social Security is now very unstable. Pensions are less common. They've been replaced by things like maybe TFSAs and 401ks where you got to take your own responsibility. And Social Security is uncertain. And according to the Federal Reserve, and this is in 2022, only 54.3% of families had retirement accounts with a median value of $86,000. So people are really underwater. And if you look at this stat as well, those that find Social Security extremely important between the age of 50 to 61, it's 63%. So that means people rely on it. You add in important 63 plus 28%, you are over 90%. That is the disturbing thing for me. The younger generation, they don't know what's coming, so they don't care as much about that. But something on my collar, maybe. But this is deeply alarming. Now let's talk about your two holdings, and I'm going to share another. I feel like I'm going to be throwing a whole bunch of buckets of cold waters, but there is hopefully a silver lining at the end. Over the last 3.25 years, Bitcoin has gotten you nothing. Zero return. Okay? That's the hard news. Tesla, over the last 3.5 years, zero returns. So if you're in a position, you're buying these things now, and imagine the status quo happened, you'd get zero. So this is what you always need to prepare for. But there's a twist. You take that 3.5 years and you extend it by 18 months, it's a very different situation. So this is Bitcoin over the last 5 years. It's up 776% return. And you can see the big cycles there. If you look at Tesla over the last 5 years, it's 1136% return. It has far outperformed Bitcoin. But the point here is, and this is there's 3 big key lessons to investing here in this first question. A lot to unpack, and I could talk for days about this. The most important thing is time matters. You need, lesson number 1, a 5-year runway so you don't get caught out with zero returns for both of these assets over these 3.25 years. But the other important thing to also note is when things are low, that's when you go in hard. Okay, when you have a $15,500 Bitcoin, you buy as much as you can. When it's 60,000, you nibble. When Tesla falls to 104, you buy as much. You do crazy stuff that I never do, like out of the money call options and stuff. That's when you go hard, because we know in time it will pay back. So we're going to, again, this is a big, big question, but it's so important for everybody here in this audience. Second thing, timing is everything. This is a simple chart I shared on Patreon. It's about kind of our focus for the future. And it shows you a simple chart that I put together of, imagine you DCA $10,000 per year into asset. Say that asset's like Bitcoin. It goes up 30% a year for 3 years, and then it falls 40% in the 4th year in the bear market. And while it's easy to feel like a hero when something goes up, the problem is when something goes down. And this chart illustrates the impact of investing $10,000 annually using dollar cost averaging with that 30% compound annual growth rate for 3 years, followed by a 40% loss in the 4th year. The significant drawdown destroys the profits if not realized, and emphasizes the importance of profit taking and rotating into new assets, new alpha makers before a bear market hits. So important. And you'll see as well, certain assets outperform others by a large margin. All right, so timing is everything. And another lesson, investing is a blood sport. There is nobody to save you out there. Now, there's another thing too. Do not lose all hope, because this is the hard truth. 30,000 Canadian is not a lot of money. It's very precious. The more money you have, the more risk you can take. The less money you have, the less risk you can take. But hypothetically, it was possible for many people to buy things like Solana at $8. And if you had 30,000 into $8 asset that goes to what it is now, you made $530,000, $560,000 approximately. So there are ways of making crazy gains. This comes from this number here, 30,000 on Google, 22,000 US dollars. Now, in the 2 assets you are in, I'm going to talk about these 2, because if these 2 people are right, I'll show you a little table I put together for you as well. Hang loose. Jack Dorsey predicts at least a $1 million Bitcoin price by 2030. He has dedicated his whole life and his whole business called Square to Bitcoin, period. That's it. Bitcoin, Bitcoin security, Bitcoin developers, Bitcoin mining, helping people stack Bitcoin using Cash App, etc. Help people make payments, get paid in Bitcoin. That's his entire focus. He sees what's happening with Bitcoin. He believes, just last week he said this, $1 million at least. And Cathie Wood believes Tesla could hit $2,000 in 2027 because people don't know what's coming. We'll talk more about that later, because this question dovetails into another one. So let's look at your position and what that could be if Jack and Cathie are right, and assuming no withdrawal and your targets hit, and we're going to go out to 2030. Remember, if you are pulling from that $30,000 Canadian bag, it's not good. You need that runway of 5 years or 3 to 5 years at least, because of what I've shown earlier. Now, This is the math. Your price target 5 years from now, Tesla is $2,000. Assuming that's correct, add a fudge factor going out to 2030, so it doesn't hit in 2027. And Bitcoin goes to $1 million in 2030. Your price now is $165 for Tesla, it's $61.5 for Bitcoin. And the return will be 1,200% for Tesla, 1,600% for Bitcoin. And your allocation today is 7,000. I convert everything to US dollars into Tesla and 14,600 into Bitcoin. Your shares will be 44 shares versus less than a quarter of a Bitcoin, but that will yield you 325,000 by 2030, which is not to be sniffed at. Now, if you can rotate, you mentioned something very carefully, 1/3 into Tesla and rotating after Bitcoin pumps, that is important. But what would I do if I was in your situation? I would increase Tesla, and we'll talk about that next as to why. I would reduce IBIT and take a part of that and make an allocation to something disruptive in crypto. Now, I'm going to share something that nobody has ever seen in the world before. These are my biggest alpha generators. I have a very heavily concentrated portfolio in very, very few assets. That's my whole thing is do a lot of research, find the winners, get in early, get in hard, and then wait. I also use options to increase my exposure. Two things here. Bitcoin has been my weakest performer, and I've been in it since 2017. Think about that. The other ones in the middle, CleanSpark, MicroStrategy, NVIDIA, all my big bangers. But everything with a green check mark, I've used things like options and synthetic longs to make these gains. And also I DCA into them as well, and I buy them. Tesla is low because I bought a ton of Tesla over the last 14, 15 months, an absolute boatload. My average price for Tesla was $17.50. Now it's higher. But still, even that, it has done very well because of very low cost basis using options initially. But if Tesla goes to where I think it's going to go, that will be a crazy return that will far exceed all the others you see there, okay? Because of my leverage positions. The other thing to note about this is the time frame that these returns came in. So again, Bitcoin since 2017, what's that, nearly 8 years? CleanSpark, 18 months. MicroStrategy, 18 months. NVIDIA, 24 months. Solana, 18 months. All the big gainers happened in that very, very short window of time. Tesla, I've been in also since 2017, just like Bitcoin. But again, I've been DCAing into Bitcoin and also Tesla, and that's reduced kind of my cost basis. So this is kind of the justification of how you need to not be just entirely in two things. Throw a little bit. Like I used to have just a 5% allocation in Solana. Now it's bigger than my Bitcoin position. It's crazy. My MicroStrategy position is far bigger than my Bitcoin position because of options. So sometimes it's worth allocating a little bit to riskier assets for that exponential return. So that's kind of another thing too. And if you can rotate, like you mentioned as well, nail the top of the Bitcoin market, rotate into the next big alpha AI asset, that can also really amplify our gains as well, as long as you can do it tax-free. But there's one thing for sure, and that is you need passive income in retirement. You can't have, I know this is the third or fourth bucket of cold water I'm throwing, you can't have that 30,000 Canadian locked away. You need to be able to draw from your assets for those rainy days, for cost of living expenses, for vacations, for memories, for medical stuff. That's the key. So what you need is passive income. And how we get that, I don't know. But this is just something that's really weird that's happening right now. And I'm going to cover this in the second question. So hang loose. This is part of you for you as well. This is from Moonshot1. Would you recommend buying a Model 3 or Y with FSD and using it as a Robotaxi? From what I have been reading, it could pay for itself in a year or two. And Tesla will need to make this an option on August 8th. So I'm going to break down on a cursory level what is happening. Before I jump in, there's two worlds that are coming fit, fast, and furious for us. One thing I do not know is, will the AI future be dystopian or utopia? That is the big question. And this little graphic on the left is kind of poverty and misery and darkness and everything else, because everybody will be stuck on UBI, etc. Or will there be so much abundance, it'll be unicorns and rainbows and picnics and lots of delicious fruit in the park and great weather and everything else? I don't know what it's going to be. I think initially there'll be a lot of disruption, so it'll be a little bit to the left. But for those that have the foresight to position themselves, they can have the one on the right. This is why I make these videos. No other purpose. Let's look at this. We'll get back to these CyberCab, Robotaxi things. The Model 3 now is $216 a month lease. All right. The Model Y is $299 a month lease. Ford is losing $140,000 on every car they make because Tesla is making cars at a profit and they're cutting their prices and nobody is buying anything else but Teslas. That's the problem. That's an example of the disruption. So if you imagine Ford is on the left here and Tesla is on the right, but there's more coming. This is what's coming. And it's funny because there are critics of FSD that don't actually have it, but they say it doesn't work. It drives me everywhere. Drove me here to this office today. Okay, let's talk about this. This is from Kevin. And by the way, I know a bunch of people that are stacking Teslas in the hope or belief that these Robotaxi things will come. We don't know yet, but from what I read and see and study, it is coming for sure. Now this is an example. Kevin Melnick. Day 5 of having FSD in my 2018 Model 3, aka Robotaxi, sit in the garage and driven with version 12.3. I'm patiently waiting for it to make me $30,000 a year, and I've decided to stop driving it to preserve it for when it awakens, i.e. it becomes that passive income generator. If I let all the other beta users put miles on their vehicles training mine, then I'll have the Robotaxi on the roads. Genius. And that's exactly what's happening. All the other vehicles are uncovering all the edge cases. That's why Elon cut the price. That's why Elon invested $10 billion in compute to do exactly this. Very few understand the genius of this man. Most people, probably 90% hate him. And I don't get that, but that's okay. Maybe because they read the media. Anyway, let's talk about this and what it could generate, because even Elon Musk said it can drive significant income potential. Elon Musk said a Robotaxi could generate $30,000 per year for its owners. Of course, Tesla's probably going to get a piece too, and that's just the nature of the business. But this substantial passive income stream makes the investment in a Tesla more attractive. You could be investing $216 a month on a car that makes you $30,000 a year. Okay? Now I'll get to some of the underbelly of this in a minute and break it all down, because it's not going to work for everybody, okay? But the quick ROI is it easily pays for itself in a year. The Tesla batteries last 1 million miles, so it's a huge ROI. Imagine your typical cab would do 30 to 50,000 miles a year. That could be a 20-year car. Very low total cost of ownership, especially if you have cheap electricity. And you can use it as a car yourself when it's not running to the airport and back when you're sleeping at night as a Robotaxi. So all these benefits. And this is part of this absolute abundance that AI can unleash. But you've got to be in a position to receive that abundance. If you're not, you can't play. But there's more. So these are things to consider about this space. First of all, financial viability. Is the juice worth the squeeze? I don't know. If you had 2 of them, 60 grand a year, assuming that's true, it could be very lucrative. If you have 5 of them, and I know people that are stacking 5, they're buying the Hertz cars now for 25 grand or less, which are in perfect nick, low mileage, and they're stacking them. Will the CyberCab work? FSD capabilities? We don't know yet, but I am 98% sure it will. Will regulators approve it in your jurisdiction? We don't know yet. Some jurisdictions that are backwards will not. Some, like Nevada, Texas, Florida, yes, they will. Also, China is coming full hog as well. They're going to approve it. And you've got to think about things like maintenance and insurance costs, how much that costs. If you get your insurance from Tesla, it'll be super cheap. So a lot of people will do that too, but it's not available in all states. Also, is there market demand in your area? You've got to be near what I call feeders. You've got to be near things like hotels, downtowns, restaurants, airports, all that type of stuff. A lot of kind of tourists And if you don't have that, it's probably not worthwhile doing it. So very important. If you're in rural America, in the fields in Omaha, Nebraska, or somewhere like that, it may not work. If you're in the city of Omaha, yeah. But other than that, no. Now, charging and cleaning costs, you got to factor that in too. If you do it yourself, you can save money. And by the way, the way you make money on things like rentals is you do it all yourself. All right. When you start hiring plumbers and electricians and roofers and window people, you lose money. But if you can do it yourself, you make a fortune. And competition. How much competition? Are there 10,000 of these puppies in your city? That's the big issue. A quick map of where you could operate these robotaxis. You want to be where the darker colors are, the 7, 8s, 9s, 10s of density. And this is basically distance plus time plus drives for things like Uber and rideshare. That's where you want to be. If you're not in those spaces, it's probably not going to work. But remember, most people, 90% of people live in these areas as well. Now, there's one final thing, and Elon Musk did like this statement. And this is, again, what people don't see. And again, no, Tesla's been rough. We showed it in the chart before. But this is from Trend Trader. And again, Elon Musk liked it. It's over. FSD is solved. Remember, Trend Trader has version 12.3.6. That is coming for us plebs maybe in another 2 to 3 months. It is the only escapable solution. The entire world has no idea about what is about to hit them hard. Between robotaxis and Optimus and energy, Tesla will rule the world, and I am beyond shocked that Tesla is trading so low. So am I, by the way. And keep it as low for as long as possible, because eventually this company will not stop at $5 trillion or $10 trillion or $20 trillion market cap. Its market cap is going to be much larger than those numbers because of all of the colliding S-curves they are in the middle of. All right? This is what people do not get. And I understand the hatred of Elon, and I understand the hatred of Tesla, and I understand the hatred of BEVs. But if you want to be, put your biases aside, study this. This is definitely more important than Bitcoin, in my opinion. It's going to generate more return. And just as a reminder of returns, okay, Tesla's already made me more money than Bitcoin. But I can do options on Tesla. I can't and I can't sell calls against my Bitcoin position very easily, not in the same way I do it with this. So that is the Robotaxi. Could it be a passive income for this whole community? Absolutely. But we'll see how it all shakes out, and I'll be on top of that. So next question from Tango. Given the out-of-control fiscal condition of the US, how would you be investing now if there were no Bitcoin or cryptocurrencies? Interesting question. So first of all, I've always been somebody who invests in rapid growth, which is disruption. And it comes in different flavors. So in the absence of crypto, some areas I'd be looking at would be AI, all forms of it, which is exactly how I'm positioned right now. AI and crypto are the only two things I really touch. And companies at the forefront, you got to find the winner. Find the one with things like computer vision, autonomous systems, AGI, baby AGI is what FSD is. And this will have immense potential for returns. Other areas, depends if you have a background in biotech and healthcare, you can do that, but most, like biotech I find it more risky than crypto, to be honest. Clean energy and sustainability, that'll be a high growth area too. Next gen infrastructure, 5G. By the way, private 5G is in the Tesla vehicles, the only automaker to do that. People aren't aware of that. So the cars can communicate with one another, and they can communicate with the mothership, and the mothership can communicate with them. Also, space is hot, like SpaceX. Still early days. Commercial space industry, commercial comms, satellite tech, space tourism, asteroid mining if you want to get some gold. All of this stuff is possible. Quantum computing is also coming. It's very nascent right now. I do believe by 2028 it will be in a position to maybe hack Bitcoin. But Bitcoin will be quantum hardened by then. So don't worry about that either. So the other thing as well, disruption is kind of like that first chart. Let me refresh it back because I'm jumping all over the place. But everything I talk about today is interconnected. This is an example of kind of 3 years of 30% CAGR and then a 40% drop, which wipes you clean. All right. There was a time where we made crazy, crazy money in what many of you weren't even probably trading in, but this is the dot-com boom era of the 90s. Crazy money was to be had. But if you did not get off the train, you lost everything and more. All right. So disruption has risk. You got to ride it while it's going up and get off before it tops. Absolutely critical, everybody, because everything gets fluffy and frothy and hot. And that's when you need to pull the ejector seat. Okay, so just remember that too. That's what I'll play. Next question from Spicy Potato. 1 Bitcoin or a down payment for a house? And I'm worried that if I wait for rates to go down, prices will shoot up and then it will be unattainable, especially in California. Well, this is an interesting story. First of all, we have some realtors and professional real estate people here in the audience too, who will remain nameless. This is something that really it perplexes me because I've always believed in real estate. You know, you make money in the markets, you take it out, you buy something that yields passive income, you make more money and you buy more properties and you write them off. I was always a big believer in that, but now we're in a special time. So this is a tough one, and I'm just going to lay it out the way I see it. First of all, the pros and cons. The pros for a house is everybody needs a castle. You will go broke renting. It's better off buying, even if it's a complete fixer-upper, and fix it up gradually over 5 or 10 years. However, it's a weird, interesting. You mentioned California, and California is going through some demographic changes. It has a lot of the people that own the expensive homes are leaving to save taxes. And it's going to be a glut of expensive homes on the market with very few buyers. So those prices of those homes I see coming down over time. And the boomers also, because of demographic changes, will start selling the big homes as they downsize into smaller nests because they don't need a massive house anymore. So the combination of this means you don't have to sweat too much about prices going up when rates come down. Okay, because a lot of people aren't putting their houses on the market right now anyway because they know people can't afford the 7.3, 7.4% mortgage rate. So when that does happen, there'll be a lot of houses to buy from. So you'll be fine right there. However, regarding Bitcoin, everybody should strive to be a whole coiner. Everybody needs a castle. Everybody needs a whole coin. It's like I'm torn in between here. We are in the Bitcoin bull run still. I believe we have not topped. A lot of people are saying, oh, it's topped at 70,000. We're going to go down from here. I don't see that. There's too much money coming in. Even last week for the ETFs, sucky week, they were still positive. And Bitcoin requires no maintenance. So it's cheaper to have Bitcoin. And there's also some other radical changes happening to the property market too. So Bitcoin is, as Joe says, wealth that does not leak. And again, shout out to Sanjay as well for getting this to me first thing this morning as we work together on this 7 days a week. But from Joe Burnett, property taxes, maintenance, and insurance are leaks in real estate. Bitcoin is wealth that does not leak. Now, if you look at the spike, not only did car insurance rates spike in the US, but home owners' insurance rates have gone through the roof. The average Florida house is now $12,000 to insure. It's $1,000 a month. You could nearly finance $1 million for that monthly payment on insurance per year. I mean, when rates were so low and everything else, it's crazy. And as Michael Saylor says too, is the states will tax your real estate to death, but you do need that castle because you need somewhere to live and you don't want to be paying rent. So it's a tough one. But remember, Bitcoin doesn't leak. Real estate does. And if you are in a place like Florida, again, just show this chart. Florida, Louisiana, Oklahoma, Texas, Mississippi, Colorado. I'm glad to see California is not on that list for you. But they have crazy high insurance rates, which is very expensive. And then you layer in property taxes. It starts getting unaffordable. And now we're at a place, I saw a stat in some city recently, where it is 3 or 4 times cheaper to rent a condo than to buy one. So think about that. Wait for the tide to turn. Don't feel under pressure. Stay in the bull market for now. Get out and then use the down payment. Signal 103, and hopefully you'll only have to use half of your Bitcoin to do that. Thank you for coming. Simo25, do you believe that Bitcoin will eventually be the universal currency? I've been thinking lately, with mass adoption, constant bid, much higher price leading to trading in Satoshis rather than Bitcoin, technology making wallets easier, fiats dying, that eventually it will become less volatile and will develop into a stable currency. Any thoughts? There's a lot to unpack here, and there's a lot of thoughts too. So first of all, the sheer fact of the matter is, and the Bitcoin maxis will start throwing mud at me now for saying this, but transaction capacity is a massive concern. Bitcoin handles about 600,000 transactions per day, way less than Visa, that does about 600 million. Shout out to Uncle Fred as well with this data, which is very timely. The proposed solution, obviously Bitcoin needs more speed. There's no way it can handle global payments as kind of an underlying payment mechanism. What it does need is a layer 2, but I think after seeing the performance of layer 2s in Ethereum, they're not going to cut it. What it needs is a layer 1 with extremely fast transactions to work with Bitcoin as the base layer, and you know the name of that layer 1, which I won't even discuss, but that doesn't exist yet. I was hoping something like that would come out soon. It hasn't yet. But the point is, that is required. Layer 2s on ETH don't work. Will layer 2s on Bitcoin work? No, I don't think so, unless they have radical technology. Another thing that needs to happen too is we need to change the block size to make Bitcoin better, help it scale better, increase the block size by a factor of 10 or 20 or 100. And of course, that will bring about block size wars and everybody will go mad, and who knows if that's going to happen. And then there needs to be much more integration with conventional systems to be that legal tender. We have places like El Salvador that have done it, so it shows it's possible, but it's at a very small scale. And the value standard as well, Bitcoin has to be positioned as a primary unit of value. I think what could trigger that is something like having oil denominated in Bitcoin would be a game changer. And I look forward to the day that that happens. It'll be fantastic. So yes, it's possible, but a lot of stuff needs to happen first before we get there. But there's another bigger roadblock, and that is most governments will not like it. Governments will lose their control over money printing. They can print free money to do whatever the hell they want. Wars and such fun stuff. Sorry, that was a bit sassy. I retract that last statement. They will have loss of control over monetary policy, which controls the economy. They will lose control over the plebeians, you and me. There will be difficulty in overhauling existing financial infrastructure. They'll still use the same case, like, oh, Bitcoin's used for illicit activities. No, it's not. Cash is. But anyway, that's what they'll argue. And potential loss of government revenue from taxes and seigniorage. That's a big problem. So the governments will not want to give this up. And coincidentally, a very fun statistic too, guess what the 2 least popular government agencies are? And I'm sure this is the same all over the world, but the Fed is at the bottom of the list along with the IRS. And that all ties back to why they don't want this. And there's a ton of great Bitcoin questions today, so I'm grateful for them. But this one just came out from Marty Bent. Central planners are scared. Bitcoin is quite literally the biggest threat to the existence of central planners because it enables individuals to opt out of a system dependent on trusting central planners. The fact that they're deriding Bitcoin is a good sign because they are scared. This is Team WEF, Team Davos, Team IMF, Team Central Bank anywhere on the planet. They do not like this, okay? They will lose control over us if we opt out of the system. It's that simple. That's why we Bitcoin, everybody. Not for the crazy alpha, but as a life raft. And this is another very key, poignant point from W.E.B. Du Bois. The cost of liberty is less than the price of repression. What does that quote mean? Well, financial freedom. Bitcoin offers individuals financial liberty by providing a decentralized, censorship-resistant alternative to the traditional fiat currencies controlled by government. And the cost of this financial freedom is the effort required to understand acquire and securely store your Bitcoin. The cost is a lot less than the price of repression. And resistance to financial repression, governments can engage in all sorts of terrible things like inflation, capital controls, confiscation of wealth, etc. Now they're trying to come after your wallets. They're trying to prevent things like staking. You name it. Anyway, probably the most important slide today. Let's get on to some crypto news, everybody. Thank you all again for coming, and thank you to the mods in chat, TND, Tesla, and K8, and everybody out there. I see several folks are asking about the upcoming Pyth unlocks. More broadly, can you provide a compendium update on Pyth and comment if you're still bullish? Or if you see any worthy emerging competition or possible clouds forming on the horizon. From 3 people, Amol Chu, Blue, and SMCB360. Everybody's asking about this. And yes, this goes to exactly why we built the compendium. It's critical. Now, I made a should I buy Pyth because it had a tiny market cap, and I saw it, the technology and everything else, as a link killer, and the relative market caps were a pittance compared to Chainlink. And yes, Pyth is better, cheaper, faster. And when I made that video, still, even though Pyth is down, it's still up 59% since that video. Should I buy? Now, the question is, what do we do? And we see Pyth hit about $1.20, and now it's about 46 cents. So it literally went from 20 cents to $1.20. It 5x'd in a couple of months, and now it's come back down to earth because everybody is afraid of this unlock. And unlocks are things that I schedule in every single Octa I do on Tuesday. And this one is coming in the unlock on Tuesday on Octa. Now, first of all, back to the market caps. Pyth with a market cap of Link at all-time high. It still has a long way to go. Pyth is like a tiny fraction of the market cap of Chainlink. So that being said, it still has a lot of upside. But this unlock will bring about some sell pressure. We don't know what those people will do with that unlock, if they're all going to hit the market, but it's massive. You can see here, 141.67% of the circulating supply is going to be unlocked. That's about 2.13 billion Pyth, which is a truckload, which is worth $999.67 million. Call it $1 billion between friends. And yes, it's going to rain down tokens. So would I hold through this storm? No. Next question from Zito Crypto. As a professional and someone who has successfully traded for a long time, what do you suggest for someone who loses a significant portion of their portfolio in a single trade? Should I take a break? What did you do when you experienced substantial losses in the market in the past? So, excellent question. And I did. When I was very young, I was 20 or 21 years of age, I made a lot of money in one trade. And I got very arrogant. I thought I was a god. I thought everything I touched turned to gold. I took that money. I made about $21,000. I borrowed money and invested about $70,000. Lost it all. And I'm so grateful that happened. Because that made me who I am today. It made me humble. And it made me make sure I never make that same mistake again. Okay? And you learn allocations, risk management. That's why I keep talking about allocations matter. Yes, you can go out the risk curve, but only with a tiny piece of your bag. If it blows up, it doesn't matter. And you keep your big majority bags in things that you deem are safe. Things like Bitcoin. I talk about Bitcoin because it's safe. It's not going to get you that 10x. Well, technically, it could this cycle, believe it or not. If you bought at 15.5 and it goes to 150, a lot of people are expecting more than that. That's a 10x, which is unheard of. Still possible, but from here to go from 65 to 150, it's a little over 2x, not that exciting. And that's the key to investing. And remember, if I use leverage, if I do a perp on Sol, it's literally, I calculated, it's like 0.001% of my bag. It's nothing. I do it for fun because I know perps are there to wreck you. Now, do I use heavy, dangerous leverage on stocks? Yes, I do, because I know exactly how to manage the risk on those puppies. So this is kind of a little bit of background. Now, what I would advise, it does happen to everybody, that the most important thing when you make a mistake like that is to learn from it. Pause and reflect. Take a break after a loss, okay? And this can prevent reactive decisions driven by emotions such as fear or the desire to quickly recoup losses, which will make you lose more because your frame of mind is not in the right place. Use this time to assess what happened, understand what happened, review the trade, analyze it from beginning to end that led to the loss. Understand what went wrong. Was it a market anomaly? Was it an error in analysis? A failed strategy? Was it leverage? No risk management? Too much allocation? Too much greed? Listening to somebody spewing crap on the internet? I don't know. Find out what the root cause was and never let that happen again. Put it on a sticky note by your bathroom mirror and watch it every single morning. Now, it's very important to get back in the saddle. And to do that, before returning to trading with real money, consider a period of trading with paper, as I call paper trading. Simulate it and make sure before you get back on the saddle, you're winning 80% of the time. You're getting in, you're getting out. A little secret as well that I always like to know is know your exit before you enter. So if you're buying something at, say, $60, set your goal to get out at 100. You can get out. Make sure you do. Or hedge or do something. Or if you're in something super risky, you allocate $1,000 and it does a 10x. Very first thing you do is take your initial capital off the table. And if you want to let the other 90% ride, you can do that. But that way you can play with the table's money. So important. And then in future, always manage risk. Consider implementing or adjusting stop loss orders, limit potential, allocations, position sizing. It is all so important. And finally, always manage emotions. Trading psychology is critical. It's essential to maintain discipline and control over emotions. Practice detachment from the outcomes of individual trades. As I say, if you don't care about money, you're much more successful. If you're emotionally attached to your money, you will not be successful. Consider techniques such as mindfulness, talking to a mentor, a trainer, a coach. Get that emotional resilience. Now, this was an area which I knew nothing about when I was 21 years of age, which is nearly 35 years ago. It's bonkers. We have spent an inordinate amount of time, years since I started this channel. I discovered people have the same problems I had. It's very difficult to understand how the brain works. So we have spent a fortune and a ton of time building this thing called Investor Profiler. I was hoping to have it out by January this year. We are late, but it's coming. It will be something that will help you identify your strengths, your weaknesses, and how to fix them in a very simple little thing. And that will be so important because, as Ray Dalio says, if you know your blind spot, and it'll be, by the way, free for everybody to use, won't log any data or anything else. It's just to help the community. If you know what your weakness is, that's the first step to being successful. If you are arrogant and you've no humility and you have a greed of money, you will fail. Okay? Hard as the 10th bucket of cold water I threw today. So important, everybody. So important. Next question from Elite APS. Oh, by the way, one thing I did forget to mention is Zito Crypto. Don't forget to hang out in the community. There's tons of people you can learn from. And they'll harden you up and get you ready. And then keep an eye out for this too. Hopefully it'll be out in the next week or so. This big team behind the scenes working on this little thing that we're going to make a mark in history too about. I hope as well. Elite APS. Do you think it's redundant to invest in both Jupiter and Raydium, given that Jupiter does everything Raydium can do and more? So this is a super interesting question. I have allocations to both, but I have a small piece of Raydium, and my whole thing was buy a little bit of these Sol alts and hold them and see what happens. Some will go do really well, some won't. I expect that to happen. Let's look at a couple of things. Let's compare Jupiter versus Raydium, pros and cons. The pros of investing in Jupiter. Jupiter aggregates liquidity from multiple dexes. Raydium is a dex, one of many. Jupiter has mobile, and they're going to launch that in the next month, which is going to be huge. Jupiter has more users and more growth potential, and Jupiter focuses on optimizing trades. And Jupiter can choose from the best DEX. Right now, Raydium is, but who knows? There's so many out there. A new startup could pop up and be better, cheaper, faster than Raydium, and then all of a sudden Raydium is redundant. But Jupiter will not be. However, Jupiter, Raydium offers unique features: staking, farming, it provides liquidity. It's more deeply integrated into the Serum ecosystem and its foundational infrastructure. So they are both different, but both special. The other thing as well, if we look at the relative market caps, Jupiter versus Ray at a market cap of all-time high, you can see that Jupiter is already more valuable than Raydium, and rightly so. That makes complete sense. Let's look at a couple of charts for both of them right now. Now, Jupiter is very new. It just launched, so we can't run a proper ATR chart. That requires much more time to process all the data, all the bars. But this is Raydium. You can see it's way down from 2021, and it's between level 0 and level 1, but it still has heavy usage. And remember, things went crazy back then, and everything was inflated. Right now, it does have a buy flag, and it could run up. But what I would do with this one is, you buy it at $1.50 or $1.20. Sell it at $3 and wait for it to mean revert. It will range ride upwards as we go, and also watch for the adoption. Go to Dune and see how many people are actually using it and what percentage of Jupiter is handled by Ray. Jupiter chart, on the other hand, is different. I waited post the ICO to grab some, got the bottom, held it. I still hold it. I got airdropped a whole bunch of Jupiter as well. And I'm still in it. And I see this going a long way because everything is converging to the Jupiter black hole. Yet another one. This is an incredible tool. Amazing product market fit. My favorite crypto application on the planet by far. And this is what I dreamed of in 2021, which never came to fruition. So hope that helps. Next question is from RagSwap. Key narratives in the cycle would be coins in Solana ecosystem and real-world asset tokens. Recently, ZEBEC Network launched in Solana ecosystem, and it is related to RWA narratives. So what are your thoughts on ZEBEC? So questions come in, and I'll be very honest and blunt. I don't know if people want me to give airtime to these things, but I analyze everything equally and honestly and openly. First of all, caution. Beware. You've got tokens or projects that come out as something, or even Bitcoin miners that say, oh, we're a Bitcoin miner. And then it's like, okay, we suck at Bitcoin mining. Let's pivot to AI compute or whatever. You don't ever want to see that. So be careful of narrative pivots, as I call them. For example, chains that have been around for 3 years doing file storage, and they say, oh, now we're an AI play. Or we're into real world assets because BlackRock is going to do something with them, and we're going to use BlackRock's name, and we're going to pump our own coin with that because we're an RWA company. Be careful. Go under the hood, find out exactly where they are. Now, this puppy is in the crypto compendium, and it has a pretty high market cap, but we categorize it as a payments platform. It's not a real-world asset platform. And proof, they have a prepaid credit card. Ta-da! That is not a real-world asset play, in my opinion. I could be wrong, but and again, I just look at data. And in terms of where they are with on the compendium, they are terrible. They are absolutely terrible. The chart looks like this. Would I touch it? No. Okay. Stay with the quality names. Remember, you got to be with that 98 to 99% of crypto will go to zero. You got to be in the 1% of assets, probably even less right now because there's so many projects out there. So be careful, everybody. Would I touch ZEBEC? Nope, not at all. Now, I think the CEO is about 26 years of age too, so very young, very inexperienced. And favorite part of the week, and that was a long show. And thank you for hanging with me, everybody, on this Mother's Day with nearly 5,000 people watching. Woohoo! And once again, happy Mother's Day to all the mothers. Cleo the Tiger was confiscated from a private facility, and Cleo's now 11 months old, and she's really big, and has a severe but curable metabolic bone disease. But she's calm, confident, friendly, and enjoys splashing and soaking in her pool. And my question is, how come I don't have a pool? Kidding. I don't have a pool, no. too much maintenance and headache. Anyway, and tomorrow we have DCA Live. We're doing this new thing. We're rotating the moderator position. Tomorrow, Mando is going to be a moderator for the first time. He's in control of the agenda. It's going to be a banger of a show. This guy has great knowledge. CTO myself will be fielding his questions, and we'll be on all our respective channels. Mando's link will be below on his X. He'll be streaming from there. CTO will be streaming from his channel, and I'll be streaming from mine. And then you can watch it wherever you want. It's much easier that way. And hope you like the content. I'm going to do some questions right now with the whole gang here. And appreciate each and every single one of you as well. Let's go. Pop up the questions. Forgot to check the Bitcoin price. 61.5. Bitcoin's up $580 today. Not bad. Andrew Sasnov. Would you personally prefer a 1 to 2 year time horizon owning 3 Bitcoin, or 10 leverage Bitcoin with the liquidation price at 38,000? Ooh. As I said earlier, Andre, do not. Like, if you're playing with liquidation or leverage, odds are pretty high you will get liquidated. And why throw stuff away? So instead of playing that game, because 1 to 2 years, who knows what could happen? One Bitcoin could go to zero. Take 0.1% of this and play with your leverage, but hold on to your bags. I would always want the pure form and not leverage. So I would hold the 3 Bitcoin and not dabble with leverage on this. And that's exactly how I'll play it myself. Will we hit $38,000 again? I don't know. Probably not. But you never know what could happen. You really never know. There's different people in control now. Bitcoin with the ETFs, and that's impacting a lot of stuff. So be careful. From Vitruvian Maniac, are you interested in any DePIN projects? So I like Solana itself is the big DePIN project for me because everybody builds on Solana. So if you look at the renders coming over and all the other projects, I've got a long list of all the DePIN stuff. But DePIN per se, no. I played the layer 1 as the main DePIN. And that's the safest way because there's simply too many of them. And again, like I mentioned with narratives, people jump on narratives to try suck in retail investors. Oh, look, I'm a DePIN play. Oh, look, I'm an AI play. Oh, look, I'm an RWA. Oh, look, I'm a meme. Stay focused. Stay with the winning assets. And don't mess around. Especially when you find things pivoting to narratives, which is a terrible thing to do. Charles Kincannon. Do the models take into account a lever out this cycle and then buy back for 2030 price predictions? A little more brilliance to chew on. Yes, we're working on it's probably going to be the most important model. It's kind of like a hybrid of a couple of different things, like layer out, rotation, relative asset values, price predictions, and you'll be able to plug in things like, hopefully if we can pull it off, things like your cost basis and how to optimally take profits and rotate. So I don't believe in taking profits and going to cash. I believe in pair trading into a better asset, a faster horse. And hopefully, that's been my entire focus for every year. I get a big focus. That is the 2024 focus, to be in a position to be ready for optimal profit taking and rotation. So we have all the tools to tell when we get toppy. Now it'll be putting them into effect and making sure we get out. And it's okay as well to leave some money on the table. Very important. People say, imagine Bitcoin goes to $100,000. I want to sell it 99,000. No, even if you sell it like 70, 75, 80, 85, and take your profits from a cost basis of 15.5 or 20,000, you're taking most of the profit. And that's what people don't realize. And it's where greed creeps in and affects the psyche. So heavy focus on that, Charles. Great question. Jimmy, Is it possible to use one Bitcoin as collateral to buy a Tesla Model Y for my daughter? Not yet, no. The places where you could do it online, I wouldn't trust. And now the US government, I think, last I heard, they're trying to prevent the use of Bitcoin as collateral. That will go away. And I do know that high net worth people can still use it as collateral. Like if Michael Saylor wants to borrow against his Bitcoin, a big bank will give him money at 30 to 50% of the actual value. Not a problem, but I wouldn't do that right now, Jimmy, and I wouldn't trust any of the places that are out there. The rehypothecation risk is too high. What you might want to do is if you do have a large position and you want to borrow against a small fraction, like a very low percent of your Bitcoin, maybe you can do that, but I'd just be very, very careful otherwise. And a big thank you for your super stick as well. Viciously, Jeff Hammer, Andy, Crypto Katana, Glenn Joe, Pancake Panda, Vitruvian Maniac, BTC Broccoli, Forrest M, Joseph Samuel, Dog One, Adam Q, Trask Bergerson, AZ Rolfer, Signal 103, The Great Escape, Dr. Sauce, Friendly Man 2030, HS1, and Anjo. Appreciate you all. Appreciate the team behind me. And there's a lot behind the curtain here. And to make all this happen, I hope you like the show. I did throw a bunch of buckets of cold water, but they are all so important. Happy Sunday, everybody. Happy Mother's Day to all the mothers out there. And to Cleo, the tiger. And thank you all for making this possible. Bye-bye.